My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. Chances are, if you've been in and around real estate for a while, you've heard about some pretty big wins. You've heard about people doubling, tripling, quadrupling their money very, very quickly. You don't always hear about the downside of that. So there are some folks that are into real estate for the long haul, who are looking for base hits, who are looking for consistency. They're not looking for home runs all the time. And our guest today, Dan Rowley, is one of those kind of investors. So Dan and his group focus on multifamily investing, and they're looking at the fundamentals. So Dan, welcome to the show. Great to have you.
Thanks for having me on, Dave.
So Dan, give us a little snapshot of what your portfolio looks like today, as of, this will probably be coming out in September of 2025. What do you guys invest in? What's the portfolio consist of? What's your buy box? What areas do you buy in? That sort of thing.
Yeah, certainly. I guess I'll start with our market. Our primary market that we've really focused on is Greenville, South Carolina. A couple of reasons for that. The founder of Spark Investment Group, which I'm a part of, Arn Senadello, he moved from California to Greenville in about 2015. He's been in real estate 40 some odd years in residential real estate, but then he pivoted to multifamily. And he moved to Greenville. He loved it. He kind of saw the opportunities there. He wanted to kind of expand what he was doing in real estate. So he pivoted to multifamily, and he started the business a couple of years before I joined in 2022. Mm-hmm. So he lives there and operates there. They call him the mayor because he knows a lot of people. He's very social.
What size of market is that? What's the size?
The MSA is about 500,000 to 1 million, if you count the whole upstate region. So there's Greenville, Spartanburg, a number of other cities. It's a very vibrant economy, very diversified, a lot of manufacturing, a lot of growth has been experienced. So we like all the demographic and KPIs. The other reason that we focus on Greenville is our other partner, Brian Walsh, is a residential property manager. He manages now 600 or 700 doors. He's been doing property management 14 years. Arn convinced him to get involved in managing multifamily. A lot of them are scattered site. We don't have a lot of properties that are over 100 where you got to have on-site property management. So it fit right in.
Smaller ones.
Yeah, so we don't have the on-site management, but his team manages virtually all the properties that we acquire and operate. And so that's kind of one of the, certainly the secret sauces and differentiators. You have so much more confidence when you acquire property and you know the property management is solid. So just to give you a sense,
they're one of the owners of the group, so they're double motivated.
Yeah, so the incentives are aligned, right? And you're not gonna, that's frankly where a lot of deals have fallen off. Obviously financing difficulties and debt, but third-party property management is a common thread as well, as why people have lost money in syndication. So last year, if we totaled up all of our portfolio, which is several hundred units, our overall occupancy was like 97%. So that just gives you a sense.
Sorry, how many units did you say you've got altogether?
Well, we just acquired 96 more units in June. So when I add that to it, it's probably 400 or 500 units.
Yeah. Okay.
And we focus on properties that are sub 100 units. So
what's kind of the average size of the properties that you guys have? What
average is 40 or 50 units.
Okay. Very good. Yeah. Okay. That's
kind of our buy box rate is multifamily, sub 100 units. We don't run up into as much competition with institutional
in that
investors in Greenville and the Greenville County. So that's kind of what we focused on. And
Very nice. So Dan, we talked a little bit about your partners. What role do you play in the company? What's your main focus these days?
My background is finance. So I did 31 years in corporate finance. So I'm very quantitative and kind of analytically oriented. So we thought it made sense for me to join forces with these guys. They had certainly been doing, I invested with them initially as an investor, saw what they were doing and really understood our philosophies jived. The investment fundamentals are solid. I could see that they knew how to manage properties. So after 2 or 3 deals of investing with them, got to know them a bit better. And as they were expanding, they kind of needed help with some of the administrative functions, the finance, banking, underwriting. All those things were things that I've, kind of dealt with my whole career. So I kind of filled that niche. So between us, we kind of have all the different aspects of a business covered. So they have, the operations, property management, acquisitions. Arn's really good at finding deals, owner financing, and very creative deal making, as well as he's a very good disciple about what we're doing, and he's able to socialize it and cultivate a lot of investors and so forth. So I really kind of was able to round out the team, and I was grateful to have that opportunity. It's worked out better than I would have expected. We've only done deals together. We don't really anticipate doing deals apart because it just works so well. And so
with the size of deals that you guys are doing, you are raising private capital, I would imagine, for these projects. Is that true? Are you syndicating them? Do you have a fund? Do you do them kind of joint ventures?
No funds. There have all been single asset syndications. And we raise LP capital, right? So
okay, very good. So how do those deals typically work? Like what's your exit strategy, the plan for exiting these properties? And what are you looking for, value add? Or are you just kind of buying properties that are going well as is? What does that look like for you?
We have purchased value add properties that have needed some heavy lift, and Brian and his team have been able to turn around properties pretty quickly. He's got all kinds of contractors in his back pocket. So we've done value add. We've also bought new built to rent product, and we found pretty good deals with the small developers that want to develop, and we buy at CO. We're not developers. We'll leave that to somebody else. Our focus is strong risk adjusted returns, so we don't get involved in the land or the development. We buy existing assets or just built assets.
Yeah.
So the only risk on the new stuff, right, is the lease up, how long it's going to take you to lease up. But we've been able to pretty accurately predict that and get them filled up pretty quickly. And they're not multi-hundred units, right? They're like 40, 50 units at a time. So we purchased some new stuff, and we like that. My own real estate portfolio, my own rentals that I bought starting back in 2011, 2012. I still have a sizable portfolio. A lot of that was new product, new townhomes. And I certainly like the predictability, and you don't have deferred maintenance, and you have a higher kind of yield. So that kind of business model I liked, and we carried that forward, and we bought some new stuff. But we buy some pretty well stabilized assets and just keep them running and make incremental improvements. So some of them are heavy value add, some are light value add, and some are new product. So there's kind of a mixture in there. But the common thread is that we manage them all through Brian's team. They're all less than 100 units. And we've been able to meet or exceed the projections on all the projects so far. So that's something we're pretty proud of.
So you're the numbers guy, Dan. How do you present your opportunities to investors and potential investors that both makes them sound and appear appealing and exciting, if you will, while at the same time, appeals to your sense of being a very conservative investor? How do you find that sweet spot?
Yeah, I think that, I've seen a lot of deals. I was initially as an LP, right? Investing in a lot of these deals. I've seen a lot of pitch decks. I think what we would rather under promise, over deliver than the other way around. And so, if we say we can deliver 7% cash on cash, 14% IRR, which is, modest returns, but if it's risk adjusted and that's pretty solid, we'd rather do that than say we could do 10% and 18% IRR and not be confident in it. So we've kind of always focused on a few fundamental things, like we use fixed rate debt. We have never used variable rate debt.
Which I bet you're extra pleased about these days, that's for sure.
We are. So that's proven to be a solid strategy there. Modest leverage. And, I'd rather err on the side of, exit cap rates and so forth being more modest. And if there's upside there, great. We never underwrite to have a refinance during the course of it because those things are uncertain, right? So typically 5-year holds what we model. Of course, the market in 5 years is going to dictate whether it's a good time to sell or not. We can sell in 4 years, 6 years, refinance. all those things are options. So, but I think we've been able to again deliver on our expectations on all the current projects, 7 or 8 syndications so far. We have a lot of repeat investors, so that's another, I guess, vote of confidence. I think the last deal we had about 50-60% investors that are repeat. They
Nice.
liked what we're doing, the cadence of reporting, the consistency, just being transparent, always be able to answer questions that they have. So, I mean, I'm always willing as well to share the underwriting with anybody who's interested. Some people like to kick tires, some people like to really get into spreadsheets. And if you're putting your money into a deal, I don't have any objection to sending you the Excel sheet.
And I'm sure you love talking with those folks.
Sure, exactly.
Yeah, exactly. It's the same.
I mean, as an LP, I was kind of particular about wanting to see how they built up the financials too. So I would always ask if they didn't want to share it. It would kind of made me wonder why they didn't want to share.
That'd be a red flag for sure.
So transparency, right?
So Dan, walk me through what, like, you guys have done. I think you said 9 deals, or still involved in, or some have gone full circle. Tell me about one of your favorite ones.
This one we picked up last November was kind of a very tired property, tired landlord situation, been inherited by somebody. It was really in disrepair.
How many units?
38 units.
Okay.
When we picked it up for $60K a door. So as you can imagine, it's hard to go wrong at $60K a door. Mm-hmm. So the current rents were maybe around 600, maybe 550 to 600. So we were able to just very quickly improve the property. Like within the last 6 months, you wouldn't recognize the property, right? Internal, external. Rent, we're renting units for $895 now. Well, what was the clincher though, was we were able to get seller financing, 3-year note at 5%. So that's going to yield
interest only.
Interest only. So that's a slam dunk. And again, with Brian's ability to kind of turn these properties and improve them quickly, heck, we could probably sell it for a pretty sizable profit now. We're in no rush because we've got the financing for 3 years. But I think we're exceeding our projections on rents, and occupancy, and we're just about where we thought we'd be on the CapEx spend. So that's just a real slam dunk. And again, in Greenville, like many markets, right? It's a solid market. You can't really go out and find rentals that are less than $800, right? So there's kind of a floor. They're not building more workforce housing, as you know, right? You can't afford to build product to rent at that. So there's always going to be a good demand for this product. And if we just incrementally improve the tenant base and the property, we'll probably be able to get 900 pretty soon on the rents. And again, when we bought it less than a year ago, it was at 500-600 rents. So that's just a quick example of a very quick turnaround there. And again, if we could find more properties at that cost basis, or we would pick them up. But it's kind of finding a needle in a haystack. But again, off market, we have some pretty good connections there with the local team, right? So
yeah. So Dan, speaking of finding deals, what are your goals and aspirations as a company for the next couple of years?
We'd like to do a couple deals a year, which has been kind of what we've been averaging. I mean, it's been difficult, as you know, right, in the last 2-3 years to find deals to pencil.
Yeah.
We looked at a lot more deals than we actually pulled the trigger on. And that's one of the things I also want to stress is that we don't have big goals on, assets under management or unit counts, or we kind of take what the market gives us. None of us are reliant upon our fees for our livelihood, right? I mean, we all have, other streams of income and/or, we don't need to be doing this, but we like to do it. And I resigned my day job last year. I have more time now. So we'd like to acquire more, but we also are very selective. It's got to make economic sense. But again, we just closed a 96-unit portfolio last month. We hope to find another deal that we could present to people by the end of this year, but we're always looking, and as you know, maybe it's 1 out of every 20 deals. It's really something we want to dig into. So we looked at a lot of deals, but there's not a whole lot that's out there that makes a ton of sense now. But I guess bottom line is that we'll take what the market gives us. Hopefully we can find more, but if we don't, we'll be patient. I think patience and consistency is kind of what we all agree on as GPs. Let's not force something, right? Let's just wait and find something really good and then pounce on it. So if
Yeah,
we don't do any
nice.
more deals this year, that's fine too.
Mhm.
We all have a balance in life that we like to maintain as well. So we're
Good
not driven
stuff.
by big numbers, but by just finding deals that can make good
That makes
economic
sense.
sense. Yeah.
That fit your parameters. Good stuff, Dan. Well, I'm sure there's going to be some folks interested in connecting with you. What's the best way for them to do that?
I'm pretty active on LinkedIn. So if you just find Dan Rowley, Spark Investment Group on LinkedIn, I'd be happy to connect with you there.
Fantastic. Hey, Dan, thanks very much for being on the show. It's been a lot of fun.
Thank you, Dave. I appreciate it.
All right, everybody. See you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.